All right, so what is a Sharpe ratio? Why is it useful? And also, what is the Sharpe ratio of Bitcoin? So the Sharpe ratio is a useful measure for calculating risk over return. And to calculate it, we get the average annual return of a stock or an asset. We then minus the risk-free return. So for example, if we know that we could have put that money in a government bond or a savings account and achieved a certain rate of return, we want to subtract that because we know we could have gotten that. And then what we do is we divide the overall return by the standard deviation. And the standard deviation is a measure used to calculate the volatility of an asset. So for example, if an asset is normally $1,000 and the price tends to go up and down by about 20%, 30%, or $200 to $300 price range change, then it would have a standard deviation of 20 to 30%. So what we want to do is calculate the overall return and divide that by the overall risk or standard deviation in this case. So how do we calculate the Sharpe ratio of Bitcoin? Well, to do that, we want to first calculate the average annual return. So what I've got over here is 5 years of Bitcoin data from the 27th of March 2016. And so what we've got here is the price at the end of the 27th of March for every single year. And we've calculated the return at the end of each year from the year prior. So you can see here we received a 233% return in 2017 as compared to 2016, and so on for each of the years. We then calculate the average by adding up all of the returns for each of the years and dividing it by 5 years. That gives us a 415% average return. We then need to minus the risk-free return over the same period. So what we've got here is the 90-day bond yields over 5 years. So I've calculated the average bond yield return that you would have got over a 5-year period, and that is 1.5%. So the 1.5% average 90-day bond yield over 5 years. So now we've got the top part of the formula here, which is 415 minus the 1.5%. The next part is calculating the standard deviation, or the volatility of Bitcoin. So to do that, we need to first calculate the average or the mean Bitcoin price over the 5 years. So we look at all of the prices every single day over that 5-year period. And as you can see, it starts out at $416, and all the way to the end, it will actually go to around $54,000, $55,000, where it's at today. So when you get the average of all of those price points, the average price point is about $8,162. What we do then is we subtract the average price from each of the closing price entries. And what that tells us is how much does the Bitcoin price on a daily basis differ from the mean Bitcoin price, which is that $8,162. So you can see here, here it's negative 7,746 lower, and so on and so forth. For each of those, we subtract the mean. It gives us the total variance from the mean for each figure. We then square those values, and what that does is it puts the variance obviously much higher, but it turns all of the negatives into positive numbers, and you'll see why we do that in a minute. So we've got here a column called squared value, so I've squared each of these numbers in the variance. And then what I've done next is calculated the mean squared value. So that's again another average. So the mean squared variance is just the mean of all of these squared value variances on the right-hand column. So once we've got that, obviously we want to get rid of that squaring that we did before. And to do that, obviously you calculate the square root. And the square root is what gives you the standard deviation, which is 9,445. In order to calculate the standard deviation as a percentage relative to the Bitcoin price, we simply divide the standard deviation by the mean Bitcoin price, and it gives us a standard deviation of about 116%. Now, if you've got a Sharpe ratio where the overall return divided by the overall standard deviation is much higher as a ratio, for example, if I get 4 gold coins for every risk up and down 1 gold coin, then it's going to have a ratio of 4 to 1. In this case, you can see that the average 5-year annual Bitcoin return is 415%, with a standard deviation of 116%. So it's almost a 3.5 or 4 to 1 ratio. And when we talk about Sharpe ratio, anything above 1 is considered quite good, 2 very good, and 3 is excellent. So obviously if you're pushing beyond 3 or 4 to 1, it's a very, very good ratio of return as compared to risk. And that's how we get the Sharpe ratio of 3.58 here, which is very attractive. So hope you found that useful. And that is the Sharpe ratio.